As you may know, I enjoy monitoring the 13A findings of the world's super investors to see what they buy and sell on a quarterly basis. However, there's this incredible website that I follow called Dataroma that gathers a list of 80 renowned investors and publishes a list of the most popular stocks these super investors bought during that period. For instance, in my most recent update, which was from Q4 of 2023, the companies that made the list were Visa, Charter Communications, Amazon, Microsoft, and Google. Let's see how things have changed since Q1 and where the super investors are finding value. Before we begin, I must clarify at the beginning of the video that I am not in any way recommending you buy, hold, or sell any of the stocks mentioned in it. This video should only be viewed as entertainment and informational. Keep in mind that all advice is general in nature and may not be appropriate for you. With that said, Microsoft is our fifth most popular stock in the first quarter of 2024. Microsoft, with a $3.2 trillion market capitalization, is presently the largest firm among the S&P 500. The company's development of an extremely potent switching mode led to its initial success that they've amassed by providing a wide range of products for firms that are now vital to the organizations that utilize them. Microsoft has gone far beyond that these days. They obviously have their core software business in Windows as well as Microsoft Office and their server software. They also have a big cloud computing component through Microsoft Azure parts of Office 365, such as OneDrive and Teams. They also offer physical products such as Surface devices and Xbox gaming products. For example, it all started with the Windows operating system and was strengthened by the release of Microsoft Office. The company has expanded beyond just selling Windows Word and Excel software to include services like LinkedIn search advertising through Bing and GitHub, enterprise solutions like Dynamics 365, and research divisions focused on artificial intelligence and machine learning. Naturally, one of the main reasons investors have been purchasing stock in the last year or so is the company's efforts in artificial intelligence, AI. Microsoft was first in the market with their investment in ChatGPT creator OpenAI, and as of right now, they are leading the way in large language models. Investors are currently betting heavily on Microsoft's future in AI, but they are also betting that the company's current business segments will continue to flourish. Their revenues have been growing steadily. Net income has picked up after a lull in 2022, and their balance sheet is looking strong with all of their current holdings in cash and short-term investments covering their total debt. With OpenAI's release of ChatGPT 4, it's no secret that this partnership has had a very strong impact on Microsoft's share price. Moving on to fourth place, we have Apple, which went from being the largest company in the S&P 500 to the second largest company. Although not Warren Buffett, we all know about him. Apple is a business that started out with one big mode, that being their brand mode, but over time, they've obviously now grown their business to a point where it's much more than just a trendy phone. Despite a reasonably high PE of 37 currently, clearly this equation did not faze the super investors, with 6 investors either buying or adding to their positions in Q1. Naturally, Apple has a lot of product-based businesses these days, including the iPhone, Mac, iPad, AirPods, watches, home speakers, VR headsets, and more. But the real reason the company is making so much money is because of its other significant revenue segment, services. As we all know, Apple loves to provide a ton of software applications that work seamlessly with their hardware, including iOS, macOS, iCloud, Apple Music, and the App Store. Pay with Apple, Apple Support News, plus Apple TV, the list continues on, including fitness, and we've already seen the current effects of this. Apple has developed a significant switching mode in addition to thriving from its brand mode. The ecology that it ensnared individuals in promotes repeat business and client loyalty. In Apple's most recent earnings report, Tim Cook stated that services had recently broken the all-time sales record in the March quarter, coming in at $23.9 billion. However, given that products generated revenue of $66.79 billion, let's turn the clock back. It's safe to say that the business segment has come a long way over the past 5 years, still trading at a PE of about 30, given that in just 5 years, services revenue was just $11.5 billion in the March quarter of 2019 and accounted for 19.7% of Apple's total quarterly revenue in the March quarter of 2024. Services revenue accounted for 26% of Apple's total revenue. Although it's not the lowest stock that super investors could have purchased today, I believe that many investors, including Warren Buffett, are interested in this share. Buybacks. Apple recently revealed that they have approved an additional $110 billion in share repurchases, which will reduce the number of shares they own and give current shareholders a larger ownership stake in the company without requiring them to take any action. To give you an idea of the amount of share buybacks that have occurred over the last 5 years, Apple has spent approximately $416.7 billion on buybacks and have acquired almost 17% of their business. Given its strong competitive position, it is not surprising to find Apple on the list of most purchased stocks. Now let's move on to Charter Communications, which was the third most purchased stock in Q1. In Q1, Charter was once more acquired by 6 super investors. The company now goes by the name Spectrum. As all of you Americans know, Spectrum is a mass media and telecommunications firm that provides mobile, internet, and cable television services. Interestingly, though, this stock also appeared on the list of the most popular stocks purchased in the most recent quarter, Q4 of 2023. In my previous video, I discussed why I thought super investors were buying this stock, and I came to the conclusion that at the time, Charter was trading at about a 50% discount from its 2021 peak. Since then, the stock has only declined. It started to decline in Q1 and went from about $370 per share to as low as $276 per share. As you can see, the major decline occurred during the first week of February, which coincided with the release of Charter's quarterly earnings report, which made investors very unhappy. Unexpectedly, the firm revealed a decline in broadband subscribers, which was a crucial indicator for investors. In particular, Charter announced a loss of 61,000 internet users in the fourth quarter of 2023, primarily from the residential sector, which wasn't good news for the company's finances. Although this is not something that long-term investors are generally concerned about, it is a significant factor in the movement of Wall Street share prices. In addition, the company announced that the upgrade of its HFC network will be delayed until 2026. All things considered, the company's earnings miss along with the loss of subscribers did raise concerns about Charter's future growth prospects. That stands for hybrid fiber coaxial, so it was just a lot of mediocre news all at once. However, the good news is that Charter has a very low PE. The stock is currently trading at 8.8, which many will argue is more than fair given their performance. Personally, I don't follow this business, and I'm definitely not the person to ask about American telecommunications companies, but I believe that's probably the reasoning behind the 6 super investors who purchased Charter Communications this time around. All right, let's move on to United Health Group, which was our second most bought stock in the first quarter of 2024. United Health Group is a multifaceted healthcare organization that functions via 2 main business platforms, Optum and United Healthcare. Optum is a health services platform that leverages technology and data to enhance healthcare administration and delivery. United Healthcare is one of the biggest and most lucrative healthcare organizations in the world. United Healthcare is one of the largest health insurers in the United States and offers health benefit plans to individuals, employers, and Medicare and Medicaid beneficiaries. This has resulted in a rough 1,400% return since 2010. However, the stock has experienced some volatility, with the stock falling about 9% in Q1 of this year. Some investors are concerned about increased regulation, noting lower than expected increases in Medicare Advantage payments for 2024, while others are simply seeing more competition in the market with other players like Anthem, Cigna, and Humana all vying for market share. In 2023, the group brought in $371 billion in revenue, with net income of more than $22 billion over the years. Additionally, the overall economy must be taken into account. Labor costs, the cost of medical supplies, and the cost of pharmaceuticals have increased, placing pressure on margins. This has occurred at the same time that the average citizen has less money to spend. Despite this mixed sentiment, our 7 super investors clearly continued to buy in Q1, despite the stock's relatively low PE of about 31. From there, we can see that the top stock purchased by the 80 super investors in Q1 was Google. 11 super investors purchased Google this quarter, as it did, rather surprisingly, reach a low of about $132 per share at one time before quickly correcting itself. Nevertheless, as of right now, Google's shares are trading at about $175, and with a market capitalization of $2.15 trillion, it is the 4th largest stock in the S&P 500, behind nvidia and Amazon. You may wonder why this stock keeps appearing on these lists. Well, the investors who make the list are mostly value seekers who are committed to purchasing excellent companies at reasonable prices. From the surface, Google doesn't appear to be particularly inexpensive, with a PE ratio of 27. However, it's also not extremely expensive, and you should expect to pay a premium for a company of Google's caliber. Here's why I say this. First, they have an extremely successful business model. They make the most of their revenue from advertising. Second, there is very little competition. Third, Google dominates the search market. YouTube is a major player in the video space. In fact, it accounts for more TV viewing than Netflix. And finally, there's the recently launched Google Cloud, which is both profitable and steadily expanding. Since Google is one of those rare companies that truly structures itself to be a financial fortress, I'm personally never surprised to see the super investors buying into this behemoth. With that said, these are the 5 stocks that the super investors bought in the first quarter of 2024. I did want to clarify a few things at the end of the video. All of that naturally leads to extremely high cash flows, which go straight toward growing their business further or bolstering the balance sheet, which I might add shows total assets now $402 billion and total liabilities of just $119 billion. In order to provide you with a complete picture, let me remind you of the point I made in my video from last quarter. Although these are the stocks that super investors bought the most of in the first quarter of 2024, overall, there wasn't a lot of buying going on. For instance, in my 13F update from the first quarter of 2023, Google ranked first as well, but 21 super investors bought in, which is approximately twice as many investors as bought this time around. In contrast to previous periods, there has also been a significant amount of selling these days. For instance, at Microsoft, 20 super investors reduced their holdings in Q1 while 6 super investors increased their purchases. The super investors aren't finding many obvious high-conviction bets that many of them are all jumping into at the same time. Instead, they're usually just sitting on their pre-established positions and holding them for the long term. If you're interested, the 5 stocks that this group currently holds the most of are Amazon, Microsoft, Visa, Google, and Amazon Meta. Sure, Google had 11 of them buying, but it also had 2 and 3 of them selling. As we wrap up our exploration of stocks, the smart money is buying in the 2024 bubble. It's evident that navigating the stock market during volatile times requires a keen eye and strategic thinking. The stocks we've discussed today represent some of the most promising opportunities identified by seasoned investors. These smart money players often have access to advanced research, insider insights, and a deep understanding of market dynamics, giving their stock choices considerable weight. We examined the tech sector, where innovation continues to drive growth. Companies focusing on artificial intelligence, cloud computing, and cybersecurity are attracting significant investment. Their ability to adapt and lead in an ever-evolving digital landscape makes them attractive bets for substantial returns. Investing in these sectors during the 2024 bubble requires careful analysis and a well-thought-out strategy. While the potential for high returns is enticing, it's important to balance this with a diversified portfolio to mitigate risks. Thank you for joining us in this deep dive into the stocks that the smart money is buying. We hope this material was useful and thought-provoking for you. If you enjoyed this video, please give it a thumbs up and share it with others who might benefit from this knowledge. Don't forget to subscribe to our channel, Investing Tutorial, for more expert insights, market analyses, and investment strategies. Press the alert button to receive updates about our most recent posts. Happy investing and stay informed.